Nvidia just reported earnings and the stock price didn't change much after hours, even though it's down 47% year to date. To help you decide if this is a good buying opportunity, I'll explain a little bit about their business, the reasons that are holding back the stock price, and what I expect looking ahead. I'll also calculate their fair value using my discounted cash flow and compare with the current stock price. About their business, Nvidia is definitely one of the most exciting companies in the world. They are involved in almost every major revolutionary technology. Their main segment relates to GPUs for gamers, which currently represents 46% of their revenues. When it comes to GPUs, graphics processor units, Nvidia is the clear leader with 79% of the market share. Another big segment for them is data center, representing 40% of total revenues, increasing pretty fast, and should end up being bigger than gaming. They work with all the major cloud companies. It's an area that will keep growing at a fast pace for years to come. Professional visualization is responsible for 8% of their revenues, which includes the Omniverse, where companies and professionals create digital twins to emulate the behavior of products or factories in the physical world. A small but not less relevant part of their business is autonomous driving. They have the NVIDIA Drive, an AV and AI cockpit platform with full software stack. It currently represents only 2% of revenues, but as this market starts becoming more of a reality all over the world, their revenues should keep up with it. Although they are in all these great booming markets, their stock price went down harder than the average market this year, and as much as I don't like to say, with good reasons, here are some of the main ones. During 2020 and 2021, most people were staying at home, and the number of gamers increased significantly, making Nvidia's GPU demand skyrocket. Another big factor in the same period was the crypto market insane bull run that led a lot of people to buy Nvidia's GPUs to mine Ethereum. These two factors made Nvidia's gaming revenues jump from $5.5 billion in 2019 to $12.4 billion in 2021. Note that sales to Ethereum miners were included in the gaming sector of their financials, and as they never showed a breakdown, it's not really possible to measure its impact with much accuracy. They were also able to increase their prices and consequently their profit margins. But in 2022, as people started going back outside, the gaming sector slowed down, not as many people were updating their PCs. And to make things worse, Ethereum transitioned from proof of work to proof of stake, changing the way it is mined and making Nvidia's GPU obsolete for that specific purpose. This is not only ending the Ethereum mining business for Nvidia, but miners are selling their GPUs to gamers on the second-hand market for lower prices, cannibalizing Nvidia's gaming business. If it wasn't bad enough, one of Nvidia's biggest GPU partners terminated their contract alleging disrespectful treatment on Nvidia's part. And they are also seeing a softening in their business in China, mainly due to constant lockdowns, a weakening economy, and the US government's new export restrictions for advanced AI data center chips. To complete the disaster, due to all these problems, they are doing billions of dollars in inventory write-off. Logically, all these things not only made the stock drop, but we are also seeing their numbers deteriorate. Their revenues shrunk 17% this quarter when compared to the same period last year, and their earnings per share took an even bigger hit, dropping from 97 cents to 27. So, my general opinion about the company looking ahead is that they will face some serious short-term headwinds, mainly on the gaming segment. Probably for the next 2 to maybe 4 quarters things will remain slow. But thinking long-term, Nvidia is a great company that I believe will go back to the good old days, with high margins and growth. They have a healthy balance sheet, with $13 billion in cash against $10 billion in debt, and their operating cash flow remains positive even after all this drama. I mean, they tend to have the best technology in everything they do. Gaming might be slowing down from the craziness it got in the last 2 years, but it's not going anywhere. Their data center business is solid as a rock, will likely keep growing for years, if not decades. And think about these sectors they are just getting into. The Omniverse and autonomous driving will probably be 2 of the most exciting life-changing technologies for the next decades. With that said, it's always important to think about the stock price when investing in a company. As much as Nvidia has a great future, we don't want to overpay for it. This leads us to the valuation part of the video. Nvidia's current market cap is around $400 billion and the stock price $160. In order to try to find a fair value, I'll consider assumptions for the next 5 years and 3 different scenarios, the worst being very conservative, the base more realistic and the best more bullish. For revenue growth, Nvidia historic numbers are not very consistent. They grew 21% in 2018, decreased 7% in 2019, followed by two spectacular years in 2020 and 2021 of 53% and 61%. In 2022 they increased 9% in these past 9 months, but mainly due to the beginning. Last quarter they had a 17% decrease. Analysts are expecting their revenues to continue falling in the next few quarters, but also recovery back to high growth in the back half of 2023, which makes sense with the company's current situation. As I'm estimating an average for the next 5 years, I'll consider 13% on the worst, 18% on the base, and 23% on the best case scenario. Share change. It's a bit strange, but a positive change here is bad, meaning the company is issuing shares to raise money or pay executives, diluting shareholders, while a negative change is good. It means the company is buying back shares on the market, increasing shareholders' position. Nvidia's shares outstanding track record shows they don't change much. Some years they buy 1% of shares, and others they issue 1%, being basically flat on the last 5 years. On the conference call, Colette Kress, Executive Vice President and CFO, stated that they repurchased about $3.5 billion last quarter and intend to do the same in the next, which is already authorized. When management is confident on the business, which seems to be the case, it makes a lot of sense to do more share buybacks when the stock price drops hard. But as they are also going through a rough phase, I don't want to be too optimistic, so I'll consider 0.5% on the worst case, 1% on the base, and for the best, I'll do 1.5%. For profit margin, Nvidia is kind of all over the place. It was 31% in 2017, went up to 35% in 2018, down to 26% in 2019 and 2020, up again to 36% in 2021, and is now at 14%. As I explained earlier in the video, this recent decrease is due to a lot of reasons, such as slow demand in gaming and Ethereum miners having to dump their GPUs. Things will keep punishing their margins for a while. The inventories write-off also have a big weight here, something I don't expect to last. And as I also said previously in the video, I expect things to start getting better in the end of 2023, maybe 2024, so on a 5 years average, I believe it's fair to assume 25% on the worst case, 28% on the base, and 31% on the best. Moving on to price to earnings. In terms of current PE, Nvidia has it pretty high in my opinion. Investors expect crazy growth for companies valued at a 67 PE, which is not currently the case for Nvidia. Once again we see a metric where they are all over the place, ranging from 22 to 82 in the past 5 years. I think due to everything I mentioned during the business overview, the fact they are the leader in their segment, and all the amazing revolutionary technologies they are working on, they do deserve a high PE, but definitely not 67 with their current situation. Note that depending on when you are watching this video, their PE in most websites will be lower. The difference is because I've already updated the numbers that calculate the ratio. I'm considering their trailing 12 months profits ending in October 2022. For the worst scenario, where I considered a 13% revenue growth, I'll go with 19 on the base case, 24 and 29 on the best. I know it's not very in line with their recent ratios, but they are now facing some serious problems, and we are in a bear market where companies get severely punished when they underperform. The last input is the expected returns per year, where I use 15% for all scenarios. It gives me a good safety margin in case I'm wrong, and it's also a great performance when compared to the market average of around 10%. Now let's find out what a good buying price would be considering each one of the scenarios. Keep in mind that this is not financial advice. Starting with the worst case, where I believe I was pretty conservative, the fair value for the stock is $62, a 61% difference from the current $160. I personally don't think we'll ever see this price, but you never know. I certainly didn't expect to see Meta under 100 and it happened. For the base case scenario, the one I think it's the most likely to turn out, I got a fair value of $99, a 38% difference, which seems pretty far as well, but we were almost there just a couple of months ago, so it wouldn't surprise me if we go back to those prices. The price on the best case scenario is $152. If these assumptions turn out to be true, then Nvidia is basically at fair value right now, a 5% difference from current prices.